Okay, good afternoon, everybody. It is 1 o'clock, so we're going to go ahead and get started. I hope you enjoyed the music while you were waiting for us to come up. Let's get that off the screen. Okay, perfect. Something to relax. The song is certainly appropriate. Don't worry about a thing. So let's figure out how to not worry about this PPP forgiveness application. So the first thing I want to do is I want to go over some Zoom instructions. You've all gotten logged in. If you would just maximize your screen, I think that would be helpful for you. And as we go through here, if you would please use the Q&A, do not use the chat. Now, if you're having a technology issue or you're having some problems, please go ahead and use the chat. I have Tim Coons, he's my co-host, and he is sitting over there ready to help you, and he's going to help me with questions, and he'll be answering the questions that he can answer, and then we'll be making sure to bring them up for everybody as we go through it. Next to Q&A is to raise your hands. I don't know that we'll need to do that today, but if we do, it's right next to the Q&A button. And then we are recording this, and it will be published to not only our YouTube channel, but it will be published to our website, and it will be there by tonight. So if you are looking to have that, cpaofflorida.com, and you just go to the blog tab. So when you go to the blog tab, you'll be able to see any and all of these that I've done in the past and any of the podcasts that we do on other topics. So let's get started. Anybody have any questions, reach out to Tim through chat. Let's confirm, let's go ahead and raise hands and confirm that we're all on the same page and that we're all good to go and ready to get started. Perfect. Okay, I'm seeing everybody raise their hands. Great. Thank you so much, everybody. Okay, so first question that I've been keeping up on a lot of the webinars that are going on, and I want to point out a couple of things that we're going to talk about today. First of all, something no one really talks about is what did you sign? So we're going to talk about the details of the promissory note first. And also there are two bills out there on the floor to be signed this week, from actually two at the Senate, one at the House. We're going to talk about those. And then there was an interim rule, which was posted last Friday, which clarified a lot of the questions that we've been having. So it actually gave us answers to a lot of questions. So as we go through, we're going to talk about that as well. So let's start with the PPP loan. What exactly did you sign? So this is a loan. Let's be clear. It is a loan. It can be forgiven, but what you signed is a promissory note. You signed a dated promissory note. It was generally the day before your day of funding, or it could have been the day of funding. And you actually promised to pay your funding back. So the forgiveness application is a separate piece than the loan application. So keep that in mind when we go through this. The forgiveness has to be granted separately. For those of you that are using our services, we are here to help you all the way through the forgiveness. So you will just work with us on getting your loan forgiven. You still have to spend the money the appropriate way, but we will help you with the application to get that done. If you're not using our services and you're on this webinar, you can certainly reach out to us, and we are available for those type of consultations. So this promissory note does carry interest. It's 1% interest from the date of funding. The payments commence 7 months after the date of funding, and there are 17 monthly payments, and it's a fixed payment schedule. So if you add the 17 and the 7, you get a 24-month payment schedule. So it was always intended to be a 24-month loan, and they have kept that up all the way through the program. One of the key things that they want you to have not done is they don't want you to have used any other loan proceeds between January 31 of 2020 and the date of funding to pay payroll. So let's say you got the EIDL on February 5th. As long as you didn't use that loan proceed to pay payroll, then you're still okay with your PPP loan. If you did use it to pay payroll, it will be a reduction of the forgiveness amount. So the other thing is you could not have received an EIDL between January 31st of 20 and April 3rd of 20 without disclosing it on your PPP application. So that's another contingency that's on the PPP loan. You promised to provide documentation as to the use of the funds within 30 days of the conclusion of the forgiveness period. We're going to get into that, but ultimately you promised to provide documents so that you could get the loan forgiven. The bank is allowed to share your financial data with the SBA. That's really important because they both have enforcement rights in this. So they are allowed to share back and forth. You cannot default on any other SBA debt. So let's say you have another SBA loan, you cannot default on that during this period when you're going to ask to have the loan forgiven. Late fees do apply if repayment is required. Prepayment is allowed. And the banks can sell the loans just like they can with your mortgage notes. So the banks have the right to sell them to other markets if you are going to have to repay the loan. So a lot of little details in the promissory note that you sign that you need to know about and be on top of. Once you get the loan forgiven, this will be no problem. But you actually did have to sign to all of those provisions in order to get the funding. Tim, any questions on that?
No, not yet.
Okay, great. Okay, so then a few weeks ago, the SBA came out with the idea, if you'll recall, the SBA said you had until May 7th, and then they changed the date and they changed the date to say that you took the funds and you really didn't need the funds because you had to certify that economic uncertainty played into you taking the funds. Well, after a while, the SBA actually came out and said, loans above $2 million, we will look at them. There's no question. We will look at those loans. We will look at why they took them, whether they were used for the right reasons, and whether there was enough economic uncertainty that the entity needed the loan. If you were less than $2 million, you now have an option to check the box. You can say, okay, my loan was less than $2 million, and they provide an automatic safe harbor that you will be deemed to have made the required certification concerning the necessity of the loan in good faith. Because my position was always any small business was in economic uncertainty, still is in economic uncertainty. So that's the new rule, is if you got less than $2 million, you can check the box. Now, does that mean that they can't come and audit you that you needed the money? No. However, it does say that they have the right to, but in general, they're looking at the loans $2 million and higher. Loans in excess of $2 million will be fully audited by the SBA, and that's their words, not mine. It is fully audited. So if you got $2 million or more, you need to be making sure you're meeting all of the criteria. Spot checks only for smaller loans. So a couple of points on this. Borrowers that repay their loans after receiving notification from the SBA will not be subject to administrative enforcement. So let's say that you actually didn't need the loan and the SBA audits you and they say, hey, you didn't need the loan. You'll have the right to pay it back. So it's not going to affect you in any negative way other than the fact that you'll have to give the money back. And the SBA determination regarding the necessity of the loan request will not affect the SBA guarantee at your lending institution, because you all got this from some lending institution, a bank, a credit union, someone. So they're still going to back those loans. Now, there's some new things as of Friday. As of Friday, in writing, the new interim rule actually states that the SBA has the right to audit any PPP loan. Although they're going mainly for the $2 million or more, they do now officially in writing have the right to audit any PPP loan. They also say in writing that borrowers can appeal any SBA determination within 30 days of receipt. So if you get audited and the SBA says, no, there was an economic uncertainty for you, you've got 30 days to appeal that. The ironic part is the appeals process is yet to be established. So There is a rule saying they can appeal it. However, there's no way to do it yet. New rule requires banks to decide on loan forgiveness within 60 days of receipt of the forgiveness application. So, of course, you won't submit that application until after your 8-week period that you're applying for forgiveness. So, after that, they have 60 days to decide on your forgiveness. And the new rule also confirms that the lenders will not be paid their fees for any PPP loans that the SBA deems ineligible. So if they gave you the money and your banks really just gave you the money, they didn't do the right thing and they didn't get the right due diligence to give you the money, they're not going to pay the banks, and they can actually take the money back from the banks for a 1-year period. So a lot going on with the ability to audit, the ability to enforce the applications. So a lot of changes in the rule that was just issued on Friday. Okay, Tim, any questions yet?
No, not yet.
Good. Okay, I'm getting it covered. Okay, so let's get into the meat of what it is that we're all here to learn about. So first of all, we have to decide what the covered period is. We know that it's an 8-week period of 56 days. So 8 times 7 is 56 days. It begins with the date of the loan disbursement, not the date of signing that promissory note. Or you can have an alternative payroll covered period. So the alternative payroll covered period cannot be selected if you pay monthly, quarterly. You can only select the alternative payroll covered period if you pay bi-weekly or more frequently. So if you pay twice a month, you don't qualify to use the alternative payroll covered period. What they are allowing now, as of the new rule, is that you can change your payroll so that you will qualify. So if you used to pay bi-monthly, you can change to bi-weekly to make sure that you will qualify to have an alternative payroll covered period. So we're going to go into more details about what that is in a slide coming up. But very important to note is that non-payroll calculations, the covered period doesn't change. So if you choose the alternative payroll covered period, which we will go into in a few minutes, the other covered expenses do not move. So let's say you have retirement contributions, you have lease payments, you have utility payments. Those are for 8 weeks from the day of funding. They do not move with your payroll period. So you have 2 things that can be going on. You can keep the date of the loan disbursement as your 8-week period, and then it will coincide with the other expenses you can pay with this money. Or you can select an alternative payroll covered period, and then the non-payroll items will have a different period. Maybe just by a few days, but it could be by as much as a week or 2 weeks. So very important to note that those could be 2 separate periods. So let's talk a little bit about what expenses are covered. So the first ones I want to talk about are the non-payroll expenses, because payroll is where it gets a little tricky. So these are pretty straightforward. You can cover mortgage interest for mortgages existing February 15th of 20. Note that is not mortgage payments, it is mortgage interest. So you can pay your mortgage, but only the interest will qualify for forgiveness, and it had to exist February 15th of 20. The new rule on Friday very much clarified that prepayments do not qualify. So you cannot pay your mortgage interest for the next 3 months and count that. Now this one is so business rent for real property during the covered period. So what is real property? That's real estate. That's your office. That's not you paying yourself rent. That's you paying for commercial rent, which the lease is in the business name during the covered period. But where it gets a little bit more interesting is business lease payments for real or personal property enforced February 15th of 20. So now they added personal property. So personal property is movable property exclusive of land and buildings. So if you have a copy machine in your office and you have a lease on that copy machine, that will qualify for the forgiveness piece. If you have a vehicle in the company name that has a lease that was in existence February 15th of 20, that will qualify for the forgiveness piece. So any lease payments for real or personal property, they had to be in effect February 15th of 20. And remember that they have to be paid during the covered period, which we're going to get into a little more detail of that coming up. So you can use non-lease payments. They are non-commercial rent payments, but they need to be in the business name. So if your car is in your name, it doesn't qualify. Even though you always pay it out of the business, it does not qualify. It is business lease payments. Business utility payments, and they have actually clarified now what will qualify for utility payments. So they have said electricity, which we would all guess would be covered, gas as in propane gas, gas heating, not gas for vehicles, water. However, they also put transportation, and that's very unclear what transportation under utilities will be for. So transportation has been called out. There's, I'm sure, going to be some clarification coming on that because I don't know exactly what they're talking about with that one. Telephones, so your cell phones, your fax lines, your landlines are all covered, and internet access. So those are the items that are specifically called out under utility payments in the new guidance received for forgiveness. And currently, you cannot exceed 25% of the total forgiveness amount with these expenses. So if you receive $10,000, you can't spend more than you can't use more than $2,500 of these expenses above for forgiveness. So when you get up to bigger numbers, if you got, $200,000, that becomes an issue to make sure that you didn't spend more than that amount on more than 25% of $100,000, so $25,000 on the items here, because you need to spend 75% in payroll. We're going to talk about a potential change to that coming up, but today that is the rule. And per the new interim rules on Friday, costs must be paid during the 8-week period or incurred during the period and paid on or before the next regular billing date. So everybody who's tried to pay their utility bills quickly so that they're within the 8-week period, you can relax on that one. Just like Skip was playing, relax, everything will be all right. You can pay your electric bill the next day it's due. So if it's due 2 weeks after your end of your 8-week period, you're okay. There's no problem with that. So you don't need to rush to pay all of these. So now they have clarified that as long as it's paid on or before the next regular billing date, that will be allowed. Okay, so let's move on to payroll. This is where it gets interesting. So payroll forgiveness is up to $100,000 per employee. And what was clarified in the new interim rules is that bonuses do qualify, as do hazard pay and payments to furloughed employees. So if you've been paying people to sit home because you wanted to get your PPP forgiven, you can now do that. Also, additional wages paid to tipped employees are eligible for forgiveness. So if you have a salon or a spa or a restaurant and you have additional wages, so if you put them in the drawer and then you add them to their paycheck, they will qualify for forgiveness. If they just take them home out of the drawer, they're not wages, they don't qualify for forgiveness. So if you add tipped employees, you add them, if you add the tips to their wages, they do qualify for forgiveness. Also, the new interim rule clarifies that owner employees are capped at $100,000 as everybody else is. However, if they paid themselves less than $100,000 in 2019, they're going to be limited to 8 weeks of the 2019 compensation. Regardless, it's not an 8-week period. It is whatever the W-2 was divided by 52 times 8. That's the amount that you can pay an owner employee. So owner employees do have a limitation. No one else has that limitation. They're trying to stop you from just suddenly picking 100 grand of those wages and paying them to yourself. So the new interim rule does clarify that specific calculation. It does also state that employer retirement contributions and health care contributions are allowed for owner employees. So that's a big deal. We've been waiting on that for this period. As far as the people that make $100,000 or more, any other employee, the health insurance and the retirement contributions are on top of the $100,000. That's been clarified. Now, there is a vote on the Senate floor this week anticipated for a bill that would double the loan forgiveness period to 16 weeks. So you would have a lot longer to spend this money than just 8 weeks. Some companies haven't been able to spool back up quickly enough to be able to get 75% of their PPP money spent on wages. So this week, there is possibly some relief coming to that. Now, on a separate bill on the Senate floor is proposing a 24-week period and eliminating the 75% requirement be spent on payroll. So in other words, let's say you have really high rent and you had more than 25% of your PPP spent on your rent, you would not have to spend the 75% on payroll, and you would still get 100% of forgiveness. So the House, on the other hand, is voting on a bill this week that it would extend the forgiveness period to 24 weeks and eliminate the requirement to spend 75% of the funds on payroll to qualify for the full loan forgiveness. So what I'm telling you is there are 3 bills on the floor right now. All are expected to either live or die this week. So for those of you that just received your PPP funds in the last few weeks, you may have some more flexibility on how to spend them. For those of you that haven't spent them all and are fearful that you won't get full forgiveness, you may have some more time to spend those. So I'll keep you posted. We'll just keep watching this. Those of you that are in our program for this and working with us on the forgiveness, you will definitely be notified as soon as we know anything. So watch your email if you're working with us for the forgiveness. The reason they're proposing these changes is the belief that the stay-at-home orders prevented many businesses from getting back to capacity quickly enough, which is certainly the case in businesses that were required to be shut down. For instance, in the state of Florida, bars are still required to be shut down. So there's no way they could spend 75% of their money on payroll at a point other than just giving people money. They couldn't do it. It doesn't help them spool back up in any way, shape, or form. So it is a good thing. I'm hoping that some version of this passes, but we'll wait to see what happens. Now, also the new interim rule on Friday says if payroll costs are incurred during the borrower's last pay period of the covered period, they're eligible for forgiveness if paid on or before the next payroll date. So what that says in the short form is everybody was trying to panic to move their payrolls so that the actual dollars left the bank accounts before the 8th week. You don't have to do that anymore. As long as they get paid their payroll on the next scheduled payroll, it will qualify for the forgiveness calculation. So that's a big change that came out in the interim rule last Friday. Tim, any questions?
Yes, I do have a couple, Janet.
Okay.
If I pay my salary monthly, how does that affect the 8-week salary expenses since 2 months is longer than the 8 weeks? We kind of covered that, but you might want to go over it again.
Yeah, so the most important thing is if you pay monthly, you don't have the flexibility of some of these rules that I'm talking about. So for your time during the PPP forgiveness period, I would suggest you cut it down to a 2 weeks instead of monthly, because then you truly have to pay it during the selected covered period, which you can move your covered period. I don't think you can. I'd have to research that if you're paying monthly. You don't qualify for the alternate. So if you're paying monthly, you're hurting yourself with the PPP forgiveness unless you're very diligent and get it all covered in that time period. So be very cautious if you're paying yourself monthly.
Okay, I have another one here. What if your business decreased in March and April, but your loan wasn't funded until May? Can you be forgiven for paying March and April payroll with the loan?
No, no, it's absolutely after funding. So no, you've got to pay that money out after the funding.
As a realtor, if I earned some income during the 8-week period, is this amount non-forgivable?
No, it's absolutely forgivable. So there is nothing in there that says you can't earn income while you're having your forgiveness.
Can any covered expenses be in my personal name and not in the business name? For an example, a utility or mortgage interest. And I would assume that this is a realtor. So if a realtor has some costs that the bills came in their individual names, could those be paid out of the PPP
Tim, I'm
forgiveness?
going to push that one off because I have a discussion coming up on self-employed people. So let's hold tight on that one. Let me move forward because I want to make sure we get all of this covered, and I'll hang on the end and make sure we get all of these questions answered before we're finished. But let me just keep going forward, and I think I'll cover some of those. Okay, so let's move forward with payroll add-ons because we talked about the limitation of $100,000 per employee. We also talked about the limitation of a person who was self-employed employee, not self-employed, an owner employee, and being limited by 2019. But some of the other things that you can pay with the PPP loans are health insurance, 401k matching, state and local taxes. Now note what's missing here. The federal employer taxes do not qualify for forgiveness. So the Social Security and Medicare do not qualify. But in our state, the Florida unemployment does qualify. So your unemployment tax does qualify, your federal Social Security does not qualify. And then there are a few things that have not been provided. So vision, dental, disability, life insurance, there's been no guidance provided. I can't say whether these will qualify or these will not qualify. I should also note that the health insurance needs to be provided through the company in a group plan, and you'll understand why I'm talking about that in a few minutes. So the health insurance, very important, can't be in your personal name. It covers you personally, but it's got to be a group policy in order to qualify for the forgiveness. So the 401k matching, an employer's annual 401k match appears to qualify if it's paid in the covered period. So if you hadn't paid your 2019 401k match for your employees, which ERISA may not like that, but if you hadn't paid it, it does appear to qualify if it's paid in a covered period. And then federal taxes paid by the employer do not qualify. Okay, off of payroll for a minute. Let's talk about the FTE definition. This is where it gets sticky. So this is where I'm hoping they do extend that period, because it's a little bit tricky for some people to meet these definitions. So FTE, full-time employees. The FTEE that they talk about is full-time equivalent employees, because you might have 10 full-time people and 30 part-time people. So you have to come up to what are your full-time equivalents. So here's where it got a little tricky. The AICPA asked for a 30-hour calculation for a full-time employee. And the SBA said, no, most people who work full-time work 40 hours. So we're adopting a 40-hour week, not a 30-hour week. So all the way through all of this, it was at 30 hours. And now all of a sudden they've jumped it to 40 hours. As is everything else in this, it's happened so fast that the rules are changing every day. So how do they calculate the full-time equivalent employees? So if you have the average, this is a fraction up here, average number of hours paid per employee during your covered period. So remember, you selected your covered period, whether it was your 8 weeks after funding or moved to the next reasonable pay period after funding, divided by 40, and you round it to the nearest 10. So it's capped at 1 point per employee. So one full-time person can only be one full-time person. So if I worked 60 hours last week, I'm still one. Then I go to my next employee. Okay, they worked 30 hours next, or average number. So 30 divided by 40, 3/4, they're a 0.75. So now I have a 1 plus a 0.75. So that's how you're calculating how many full-time equivalent employees you have. Now they said, oh my gosh, this is so difficult. Nobody's going to want to do all of this math and figure it out. So they came up with a simplified method. 1 point for employees who work 40 or more hours per week, 0.5 point for employees who work fewer hours. So I could think of a lot of cases where that would be very valuable, because let's say most of your part-time employees work 15 or 20 hours a week. That might be much more advantageous for you to use the simplified method, because you get an automatic 0.5 for each of them, because you want to make sure you don't decrease in employee numbers, and we're going to get to that in a minute. So the full-time equivalent employees can be calculated one of two ways. They can be calculated doing actual numbers, or they can be calculated using the simplified method. So the key is that you need to keep the same number of employees as you had in your comparison period, which we're going to get to in a minute. I know I keep saying that, but there's so much to cover, so I couldn't put it all in one slide. So I promise we'll get there. But once you actually calculate how many full-time equivalent employees you have, or you use a simplified method to come up with what you have now during your covered period, you can actually reduce that number. You can actually reduce the number that you're going to have to compare to in your comparison period by a few ways. First of all, if you gave an employee a good faith written offer and they declined it, you can add them on to your full-time employees. So you can say, okay, I came up with 25.2, but I can get an exemption. I don't have to find the next one because they declined my job offer. Now, per the interim rule on Friday, there's a requirement for the employer to notify the state unemployment office of any employee that rejected employment within 30 days of the rejection. So if you have a person that rejects it, you have to turn them in ultimately. So keep that in mind when you want to claim them as an exemption. The second is if you fired them for cause. They're stealing, they got into an argument with a customer, something like that. They get to be an exception, which is going to be important coming up in a minute. They voluntarily resigned. the SBA said we can't penalize employers for something that an employee does. And if an employee voluntarily resigns, we can't penalize the employer. And they voluntarily requested and received a reduction of hours. So once again, they're not going to penalize the employer for something that employee did.
Jenny, you
So
might want to note that it's perfectly okay to hire somebody new if any of those events occur.
absolutely, and they will count in your FTEs. So when you go back here and you're counting how many hours are paid per employee, new employees count. It doesn't matter if they're the same employees. New employees count.
So in times like this, the disasters, a lot of times your wife or your children or your brothers or family may step in and come to work and they weren't on the payroll before. Add them to the payroll and pay them by all means.
Yes, and so one more note that was clarified in the interim rule is that the positions cannot have been filled with a new employee to receive the exemption. So let's say you have a receptionist and she decides she doesn't want to come back to work, and you hired a new receptionist. That one won't qualify for an exception. Okay, so then they're going to take a wage reduction. Actually, let me see. Let's skip to this slide and we'll come back to that because we're already talking about full-time employees. So the period that you have selected, the covered period or the alternate covered period, which was when you did your next payroll instead of using the 8 weeks starting with the day of funding. Now you have to find what it was that you have to compare it to, because remember the guidance says you have to have 75% of your comparison period to your covered period. So now the chosen reference period has two options. You can do February 15th of 19 through June 30th of 19, or 1/1 of 20 through February 29th of 20. So pick the one that has the least amount of employees, and that's the one you want to compare it to. Now, seasonal employers are a little different. They can also choose a consecutive 12-week period between May 1 of 19 and September 15th of 19, but it must be a consistent calculation throughout the application. That's a little more tricky. We're not going to cover that in this webinar, but if you believe you qualify for seasonal, we can have a separate conversation. So let's go to the formula. Total average weekly full-time employees during the covered period, which is the period after funding, divided by the total average weekly full-time employees during the reference period. So that's either that February 15th of 19 through June 30th of 19, or 1/1 of 20 through February 29th of 20. So it has to be 75% if you're going to get total forgiveness of your PPP. If it's not, you are possibly not going to get 100% forgiveness. Now remember, there are 3 bills on the floor this week that might change that. But today, we know it needs to be 75%. Now, there is a safe harbor. Let's say that your business was a restaurant and you were employing 50 people and you opened up and you could only spool up with 10 and then 15 and might only be to 20 by right now. But there's a new safe harbor that says if you reduced your employee levels February 15th of 20 and ending 4/26 of 20, and you restore your employee levels to the period that included February 15th. So let's say February 15th, you had 45 employees. If the June 30th payroll, you have 45 employees again, you will not have to do this calculation. So let me go through that again because it's a little bit tricky. If on February 15th, you had 15 employees, and then you were shut down, you were 100% shut down, and you will not qualify for the 75% because you could not spool back up quickly enough. As long as you have those 15 employees, and not the same ones, but as long as you have 15 employees again by the payroll that includes June 30th, you do not have to do this calculation. Very, very important, because it allows for you to spool up slowly instead of spooling up all at once. So this is a very important change that has just come up. Now, keep in mind, you still have to spend 75% of your money on wages, but it does not need to be all in the 8 weeks following. Well, it does have to be in the 8-week period, in the covered period, but you're not going to get killed on not being able to have your loan forgiven if you have gotten up to speed. So as long as you are back to full speed by June 30th, you will not be penalized for this calculation. And in general, the reduction in forgiveness will be the same percentage as the reduction in full-time employees. So if you had 10 employees during the reference period and it went down to 8 during your covered period, you have a potential 20% reduction in otherwise eligible expenses for forgiveness. So this is important if you're not spooled back up by June 30th. If you are planning to be spooled back up by June 30th, your most important thing is to spend the money on payroll to qualify for the forgiveness, and just forget this whole mess with that calculation.
Janet, you might want to point out once again that there's a whole bunch of talk on the Hill of changing that. So we can't predict that.
It may change this week, but today, and many of the PPPs are starting to time out. So today, hopefully we'll know something this week, but today that's the answer, is spool back up by June 30th. If you're one of these people that's below 75%, it will make more of your PPP forgiven. So now they made it even more complicated. So if you reduced people's salaries, you are subject to not having part of your PPP forgiven. So let's say you had a person who made $1,000 per week, and you told them, no, I can keep you on the payroll, but it's only at $500 per week. Then you have not met the 75% rule. So you are potentially going to have to repay everything that was below the 75%. And this is a dollar repayment. So if you have a person who makes $1,000 a week, so $8,000, and you cut them down to $4,000, the $4,000 you did not pay them, actually $2,000 because they'd have to go to 75%, will likely be dollar for dollar needing to be repaid to the SBA. So, however, what they say is that if it's an hourly employee, that there is no risk of having to repay any piece of that as long as you didn't reduce their hourly wage. You could have reduced their hours, but if you didn't reduce their hourly wage. From the companies that I have spoken with, most did not do salary reductions. They did hours reduction of hourly employees. So if that's the case, you are okay. If you did a salary reduction, this is something you need to calculate, because ultimately it goes employee by employee, not in the aggregate. And you have to take each employee and pick their average annual salary, well, their weekly annual salary during your covered period, which I keep using that topic. Covered period means whether you elected the 8 weeks immediately following the loan, or you elected the 8 weeks of after the first pay period after the loan. So you have to take your annual salary during the covered period and divide it by the average wage annual salary of January 1, 20 to March 31 of 20. So in other words, if they had a wage January, February, March, you can't have cut it and then use PPP funds and then expect to have that forgiven. So that is something that will need to be calculated employee by employee. If the reduction for that employee is less than 25%, then you have no wage reduction exposure whatsoever. go to the next employee. Now, the new interim rule posted Friday says you must reduce the total forgiveness by the salary wage reductions in excess of 25% of the base salary 1/1 to 3/31/20. So in other words, if January, February, March, they made $1,000 a week, April, May, June, they made $500 a week, you owe $250 a week back in your forgiveness. So you do not get to get that forgiveness for that $250 a week. I don't think this is a big problem out there, but it is a calculation that needs to be done. And the new interim rule also says, hey, we're not going to penalize you for cutting their salary and cutting their hours. So ultimately, a reduction in hours, but not an hourly rate, will not penalize the employer for both. Only for the full-time employee calculation, which remember was calculated based on hours. So they don't want to hit you twice. They want to only have you keep people working. They're not trying to punish you for doing both. And also in the new rule, if restored by June 30th, no reduction in forgiveness applies. So if they were making $1,000 a week in January, February, March, April, May, June, they weren't. But June 30th, you pick them back up to $1,000 per week, you can get total forgiveness. You don't need to worry about it. So that magical June 30th date is a big deal. You need to make sure that you have everybody up to speed back on payroll by June 30th and then spend your money, of course. But because there's no rule that says you don't have to spend the money, you still have to spend the money. But if you get your numbers back up by June 30th, you're not going to get penalized for any of the employee calculations. So let's go through a quick calculation here, then I'll go on to self-employed, and then we'll get all the questions answered. So payroll expense of $100,000. If your full-time employee count drops by 20%, you may have 20,000 not eligible for forgiveness. And if employee pay rates are reduced by more than 25%, this is going to further reduce the amount eligible for forgiveness. So this is very important because all of these play together to potentially reduce the forgiveness. Remember that magical June 30th date. If you're back up to speed by June 30th, you're in a good place. So one quick note then on the self-employed, because I do know we have some realtors on the line and we have some other self-employed people on the line. So in the application, you can get forgiveness. You're going to get forgiveness. You're going to take your 2019 profit and divide it by 52 and then times it by 8. That's how much is automatically forgiven. But you can get the same forgiveness for non-payroll costs that other people did. So the utilities, if you always have had a home office on your Schedule C, then you will always have paid utilities on your Schedule C. That will qualify for forgiveness. They understand those utilities are not in the business name. If you have a vehicle that's not in the business name, won't qualify. If you have a vehicle that is in the business name, the lease will qualify. The interest will qualify as long as it was February 15th or before that you had that in place. So ultimately, as a self-employed person, you have to come up because you received 10 weeks of PPP money. You get 8 weeks of forgiveness, just paying it to yourself. And as to the one question someone asked, you can continue earning money, no problem. That's not the issue. You have to come up with 2 weeks of something else. But as a self-employed person, you probably in the past have written off your internet, you've written off your loan, your car loan, hopefully it's in the business name. You've written off expenses for your office, such as rent to yourself. Yes, all of those will qualify, but they had to have existed in 2019 pre-February 15th of 20. If you've never written off a home office before, you can't start doing it now. So ultimately, it's based on history. They don't want you to just make up new things. Now, the new guidance on Friday for self-employed Schedule C people states no forgiveness for retirement or health insurance for a self-employed person. So you can't just put money in your SEP plan. You can't go out there and just open a 401k and think that you're going to get forgiveness on it, because although that qualifies for others, it doesn't qualify for Schedule C people. So that's my notes, what's different for a self-employed person. I'm going to stop my sharing, and then I'm going to answer some questions. Tim,
Great, Jan. What about if somebody is a self-employed person, say a dentist or even a real estate agent, and they had to go out and buy masks or equipment to sterilize things? What about that? Is that deductible?
Unfortunately, not on the PPP. It is on the EIDL, but not on the PPP. So for those of you that received the $1,000 to $10,000 deposit into your bank account, that money can be used for normal business expenses, which would be things like masks. It would be your ongoing day-to-day business purchases.
Okay, next one here. The reference period 8 weeks is based in 2019. Did I also hear it can be based on a payroll in 2020?
Okay, so the reference period in 19 is February 15th of 19 through June 30th of 19. You can alternatively use January 1 of 20 through, I had stated it earlier, January 1 through, let me see, the 2020, I believe it's through February 28th, but I can get back to them on that. I'll come back to that question, Tim.
Yeah, if you want to, anybody has any specific questions that we didn't cover, or you're still confused, by all means use that email address and send Janet an email, and one of us will get back to you and get you the facts to deal with the question.
Yes, the reference period is February 15th of 19 through June 30th of 19, and the alternate reference period is Just got my head in too many things right now, so I'll get back to you on that. There is an option, yes.
That's all the questions, Janet, but it may be very important to bring up the fact that there's other changes occurring, and then the EIDL, we're starting to see funding up to the 150,000. So by all means, if any of our clients or anybody else wants to try to get more help, then time to get on it and be in line. You might want to reference some of that.
Yeah, so let me go back to that question. You have the choice of February 15th, 19 through June 30th of 19, or 1/1 of 20 to February 29 of 20. So the reference period, you do have a choice of that on. And yes, we are starting to see the EIDLs come in larger amounts. Right now, they're limiting them to $150,000, but that's changing every day. So if you want more information, we'd certainly be happy to do a call with you and walk through your specific situation. So if you'd like to do that, reach out to me after this presentation and we'll get you on the calendar. I want to thank everybody for joining us today. I know there's a lot of
Jen, I got a couple more quick questions about the EIDL. If they got the 1,000 on the EIDL, then they got their PPP, what should they be spending the EIDL on, and what documentation they need?
Anything that was not what they spent the PPP on. So you can spend it on payroll amounts that were paid outside of the PPP time. You can spend it on normal business operations. You cannot spend it on expanding your business. You cannot spend it on new equipment. Don't go buy a new car. It's not good for that.
Last one.
You can't use it for duplicates. So you can't use the same income 2 times.
Last one is I used my 2018 tax return to apply for the PPP loan. I'm doing my 2019 taxes now. Can I use the 2019 figures for forgiveness if those numbers are different than my 2018?
No, it's very clear. The forgiveness is based on, so you used it to get, so yes, you can probably, that's one I'd have to talk through with you.
That's all we have, Janet. What a
Great. Well,
great
thank you.
turnout.
I know you have choices in who you listen to, and I appreciate you listening to us today. And we have enjoyed talking to all of you today, and we'll look forward to our next webinar next Monday. We're going to do a webinar with a financial advisor about investing in this chaotic market, so that we hope that you might join us for that and learn a little bit more about how to make your money make money for you in this market. Thank you for joining us today.
Thank you all. We appreciate your time.